Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about CDs. And right now you can see on the screen I've got SPY or SPY up on the screen, which is the S&P 500 ETF Trust. And this is a fund that has done very well on a year-to-date basis and currently sits at $433 a share. Now, if you purchase this individual fund, you will have access to a significant number of companies, most of which are going to be the largest companies in the world. You can see Apple, Microsoft, Amazon, Nvidia, Google, Facebook or Meta, Tesla, UNH, and Berkshire Hathaways. You can see that from a tech perspective, tech has had an incredibly strong year, with two of the front runners being Nvidia at 188% plus, and you can see Meta at 140% plus on a year-to-date basis. And rounding out the 100 percenters for this year is Tesla. Now, with each of these companies making up a large percentage of the S&P 500, you can see that it is no wonder that the fund itself has done incredibly well on a year-to-date basis. At this point in time, it started the year around $380 a share, and again is sitting around $433 a share, off from its highs on a calendar year basis of $443 a share. So the question that we can ask ourselves at this point in time is, if we are looking at a future state or a different time period for investing, and we look at the CD Center available on TD Ameritrade, you can see some of the different investment options that are available to us. On a 1-year basis, or even if we want to take the rest of this calendar year, so on a 6-month basis, the annual percentage, so the APR that you see right here, for 6 months for the rest of this year is going to be 5.35%. So if we were to get the 1 year, that 5.5, that is an incredibly good rate. So if we want to get that, that means that you are going to put in whatever money you get for the CDs, and you will get back that plus your 5.5%. So if we were to do that option, that would be the equivalent of the S&P 500 going up by at least 5%, or your investment return being at least 5% inclusive of dividends, which at this point in time they are paying on a trailing 12-month basis 1.55%. So the question there is, if the stock were to go up by another 5%, or if the fund, it would be around $455 a share, which is still quite a bit higher than what we have seen this calendar year. However, the last time we saw this level was in late 2021, where it's topped out at $479 a share, so quite a bit higher. So the question that you as an investor need to be asking yourself is if we think that we're going to see a return to highs, and the second, or the follow-up to that, is if you will sell at this point, or if you see a return to some of the lows from this year or even over the past 3 years. So this is one way of utilizing a passive investment, one of which is going to be CDs, which at this point in time are relatively risk-free as long as your bank does not fail. And the other one is going to be looking at passive investing, being an index fund, such as what you're seeing here on SPY. At this point in time, with such a large deviation between the risk and reward, I think that the benefit, or what I'll continue to do, is to invest or evaluate certificates of deposits due to the risk-free yield that those will continue to provide. However, I'm not a financial advisor, and I encourage you to do your own due diligence. So if you found this content helpful, please leave a like and subscribe. Thanks. Talk to you later. Bye.